co-founder and CEO, CJ Miller. CJ, it's so great to talk, and I've got a bunch of questions to ask you. So let's get started.
Absolutely.
When you look across all the current income generating strategies in DeFi, which ones do you find yourself gravitating towards these days? And what is it about them that appeals to you?
That's a good question. There's so many different ways that people do make money in crypto. You can go for airdrop hunting, you can do staking. There's a wide variety, but I've always been kind of gravitating towards the liquidity providing aspect because that's, I think, closest to what I know in like traditional finance with like market makers and stuff like that. So for me, liquidity providing, even though it's quite a bit more complex than just staking or something to that effect, it's always been something that's really grabbed my attention, and I've just been able to connect with it and understand it a little bit better than the others. There's a lot of risk to it, obviously, with impermanent loss and the complexities that come with the different ranges and the different assets that you're using to provide liquidity on. But overall, I think it's the risk versus reward for me has always been more in the reward category.
Great. So let's say you're considering jumping into a new yield farming or liquidity pool program. Can you walk us through your thought process and what green or red flags would you be looking for?
Sure. So at the very, very base of it all are the actual assets that you're providing liquidity for, right? So at the very first step zero is, do I believe in these assets, right? So you can provide liquidity on any kind of token, really, across the board. So that could be meme coins, that could be stable coins, it could be anything. So you're the very first thing you have to think about is, do I believe in these assets, and am I willing to essentially stake my money on them? So for me, that generally means that I'm sticking to blue chips. So think like Ethereum or wrapped Bitcoin or Solana. Some people might question the blue chip level there, but I think Solana has proven itself. So I will often just go off of like the blue chips that I believe are really stable, and they're going to continue to increase in price. The other thing that you'll want to look at is the volume behind it. So Ethereum has the most TVL out of any blockchain, has, I would say, the most, or I guess we can't say now. Solana has been competing quite a bit when it comes to transactions and the amount of transactions, so the volume. And those are things that you really want to look at. So for me, if I was to look today, I believe Solana as an ecosystem is outperforming Ethereum in terms of volume, meaning that there's a lot of trades, there's a lot of money being moved around, which is a good sign for a liquidity provider because that's where you make your money, right? On those fees, you want people to be trading and basically pushing the price up and down, so you're constantly earning those fees. Ethereum has always had good volume just because it's kind of the OG of the system, but I think that you kind of have to follow the money around, see where a lot of the hype is at. And right now, let's say for the last couple of weeks, Solana has really been that place to go, and that's where a lot of the money's flowing. Beyond that, you're looking at the platform. So the decentralized exchange or the DEX that you want to provide your liquidity on. So I use like Uniswap. I'll use on Solana. I'll use Meteora. That's been my go-to. But basically, you want to find a protocol or a platform that is safe, secure, and a lot of other people are using it. So I'll typically only go with platforms that have a significant amount of TVL or total value locked, and you can find that kind of information on DeFi Llama, or sometimes you can go to like CoinGecko and like those other websites to kind of do your research and understand like they're established before you actually go and put your own money.
Okay, so stablecoins and related protocols have exploded recently. How much do you think stable altcoin-based strategies factor into your overall approach, especially with all the volatility we've seen? Not so much with stablecoins, but of course with other coins.
Stablecoins are interesting when it comes to liquidity providing because you're basically making a trade-off. So stablecoins basically mean, hey, like I know this price is going to go up or down because one of those assets is consistent or it should be stable, right? So USDC, USDT, it's only ever going to be worth $1 versus Ethereum, which might go up to 4,800 one day and then come back down to 4,300 or whatnot. So when you're thinking about liquidity pools and what to provide, you can think of like a stablecoin pairing, so ETH, USDC, SOL, USDT, etc., as a very volatile pool because those prices will constantly be in flux, right? Now in comparison, just to explain this further, if you were to go in and provide ETH and SOL, right? So ETH SOL pair, there's potential that in one day they might rise at the same rate, right? So if ETH rises about 1% in a day and SOL rises about 1% in a day, you're not going to see too much action here really because they're going up at the same time. So you're actually not going to earn a lot of fees on that. Now, the benefit of that is that they're both rising at the same time and you're going to have very minimal and permanent loss. Now, going back to the stablecoin pairing, basically you're saying that I understand that there will be impermanent loss because that price will absolutely be shifting up or down and I will have to adjust my position. But you're making a bet that the amount of fees that you earn are going to outpace that impermanent loss. So it's kind of a give or take there. A lot of people like to provide BTC and ETH or ETH and SOL because there's minimal impermanent loss generally. As a market, we tend to go up together or down together. There's a little bit of disconnect, like when recently with Bitcoin, right? Bitcoin has gone up substantially while others have kind of lagged behind, and then recently, like it might have gone down with other alts going back up. So there's still impermanent loss regardless, but the stablecoin just basically cements, like, yes, you are going to get impermanent loss, and you are just going to have to generate fees to reinvest to counteract that, and then also to outperform and get your profit.
Okay, the last question for this discussion is for folks who are learning the ropes in DeFi, what do you see as the biggest mistakes or misconceptions people have about earning in DeFi? And how can we help them to avoid those mistakes?
I think one of there's a couple that come to my head, but the number one, I think, is just understanding impermanent loss. And that's something that, like, even for me, I've been doing this for several years now. You still, like, it's hard to comprehend and it's hard to fully understand the impact of it because it's not something immediate, especially with like massive moves and stuff. You might not initially see the impact, but later on down the road you can. So it's really important to understand impermanent loss, to understand the impact that it could have, potentially with different market moves and price action. So I would definitely say if you're getting into liquidity providing, absolutely try to understand impermanent loss as best as possible. Ask as many questions as you can. Come into our community or message us or leave comments on our X posts, and we'll try to help you out there. So that's like the number one thing, because that ultimately will dictate your profit. So there's always this nice balance that you have to reach of, am I earning enough profit and am I trying to limit my impermanent loss as well? The other things are really just kind of the more technicals of it. So understanding, like, if you're trading USDC or like pairing something with a stablecoin, you really want to understand the general chart of whatever asset you're talking about, because within this you have to set ranges, right? So you're saying I want to be able to trade ETH and USDC within ETH being at 4,000 and 5,000, right? And so you want to understand those ranges and the implications of when the market's moving up or down. Like back in TradFi, you would talk about support levels, resistance levels, stuff like that. That's very important, especially when you're talking about pairings, like with stablecoin pairings. So I would definitely try to understand that a bit. And even when I say understanding, it could just be getting familiar with like the moves, right? So for example, if you look at ETH, you'll see an asset that doesn't tend to move too sporadically. Maybe it's a few percents in a day, up or down, but nothing crazy. But then if you look at Sol, you see an asset that, just all over the place. It could be up 10, 15% in one day and down another 10% the next day. And see, those are the things that are super important as a liquidity provider, because you have to understand, okay, am I gonna hurt myself if I go with too small of a range, right? Like if Sol goes up 10% in a day and I'm only in a range that's, like 9% wide or something, 3% plus or minus. That means that you might incur a 1% impermanent loss if you don't catch it quick enough and it skyrockets. So I would definitely try to familiarize yourself with some of the TradFi aspects and the price action, essentially, of whatever assets you're holding.
Okay, well, thank you, CJ. We'll continue this series because there's so much that you have to help us understand all the implications of DeFi. And I think the bottom line is that as we become more skilled in using DeFi strategies, the opportunities for earning good, strong income compared to TradFi become enormous. And as long as we're careful and with your advice and guidance, we can get there. Thank you. All righty. This is great. And we'll talk again soon. Thank you.
Sounds great.
Want to be a winner in DeFi and crypto? Get support and guidance from expert-led webinars, step-by-step demos, and a safe place to learn with others. Visit DyptoCrypto.com and start thriving in DeFi today.